Hello and welcome to this edition of Market Guru. Joining me today from Delhi is Nandita Parker of Karma Capital. Thanks very much, Nandita, for agreeing to come by and speak to our viewers. My first question to you about 6 months ago is the last I picked up on some of your comments. You were fairly positive and fairly bullish about things despite the environment not being so conducive. We only seem to have worsened, right, in the last 6 months?
Definitely. I would say that, one of the things that happened, which has, two things that happened which have been unexpected. One is excessive tightening by the Reserve Bank of India right here in this market. And the other is that the European situation has in some ways deteriorated, and things have come to an end, to a head where that is concerned. So yes, things have deteriorated. In India, we've seen growth actually slow down much more than anyone would have imagined. So yeah, you're right.
Before we see things getting any better, Nandita, let's talk about the global factors first. You talked about Europe. Things have come to a head, you said. How concerned are you that things could be far more worse than what we've seen so far?
Well, the way I'm looking at it, the European leaders seem to be addressing the issues head-on at this point. And if you look at the political changes in Italy as well as in Greece, they're clearly indicative of the realization that action needs to be taken and taken very quickly. So I think that, the situation is fluid. The Europeans are either going to act in terms of fiscal policy or monetary policy. If they use monetary policy, which is some kind of quantitative easing, in the next few weeks, things will stabilize. If they use the fiscal path, then it might take longer for the financial markets to stabilize. But that's kind of the scenario we're looking at in Europe. If you look at the United States, things are much better than what we saw in this summer. We were fearing a double-dip recession. That doesn't seem to be happening. And in fact, the U.S. economy is showing resilience. So, so the global picture is kind of mixed. The way it impacts India is in terms of commodity prices as well as oil prices. And if you look at both, commodity prices are clearly falling and have fallen pretty sharply already. Crude is remaining strong, but I would suspect that given the slowdown in the global growth for next year, crude also may fall somewhat. And so, from a global emerging market standpoint, we're looking at a better scenario for next year than what we experienced this year.
In fact, the resilience of the crude, considering that that's one commodity that impacts India significantly, the resilience of it not to have cracked is something that has taken a lot of experts by surprise. Taken you by surprise as well, Nandita?
I am. I'm very clearly surprised, and I think this is the big difference between now and 2008. But let's see.
Back to India, you've been a big votary of the fact, Nandita, that as long as we are growing 7 to 9%, we will remain an attractive investment destination, given the kind of developments we have elsewhere in the world. Even that 7% now looks a little stretched. What's your view? Where do you think we would end the year by?
Look, in the short term, I mean, if you look at the signs that the economy is showing in the last month or so, we've clearly seen a slowdown here. Having said that, it's not the end of the world scenario. I think if we print somewhat less than 7% for this quarter, I would not be surprised, given all the bad indicators that we've seen in auto sales, IIP, and so on. The good news is that parts of the economy are pretty strong. The rural economy is doing much better. And the other good news is that now there is a lot of pressure on the government to act. You see the daily headlines and open letters to ministers and the government. And I think that given all of that, and given the fact that we might see pretty weak or at least a deceleration in the GDP data, I would expect a much stronger package of second generation reforms going forward.
You talked of the tightening, the rate tightening a little while earlier in this interview, Nandita, but the fact of the matter is that while we've seen this kind of aggressive tightening, inflation still remains fairly high. I mean, it continues to now even surprise the government as to what do we do from here on, while the RBI has signaled that perhaps we are going to go slow from here on. So there is a hope that the tightening is over, but you still have inflation, which is fairly high. Is that because that's been a concern for most investors through the year? Do you think that is still a concern?
You're right. But I think it's very clear to the RBI that all of the tightening has achieved very little in addressing inflation, and that inflation really in India needs to be addressed in a whole different manner than how it's been addressed so far. So just using a monetary policy tool hasn't worked at all. And at this point, this is what I'm talking about, is the structural reform that India needs is on a whole different side. When you look at food inflation, for example, the issues are to do with the supply side. The issues are to do with the lack of warehousing. The issues are to do with wastage. So if you, in a country like India, are wasting 25 to 35% of the produce, it's a criminal offense in my book. And I think that's where we need the policy reform. And if you see, yesterday there was a bit of news that we will see FDI in multi-brand retail. I think those types of things will encourage investment in warehousing, will encourage investment in building the supply chain. And I think that's what needs to happen to address inflation. And another thing that I believe very strongly is keeping the fiscal intact. So when you have wasteful fiscal expenditure, that's inflationary. And we need to rein that in. And I think that the government realizes that, and also I think the RBI has, in their last policy meeting, stated very clearly that they are now more concerned about growth than inflation fighting. So there are nuances here, and I think in the next couple of months, I would be very surprised if we don't see, in fact, an easing of monetary policy given all of the factors that growth is facing.
Just coming to the markets, Nandita, as you're aware, we are a market in the absence of adequate amount of domestic money flowing into the markets. We've been pretty much, especially the last couple of years, or if nothing else this year, we've been so dependent on FII inflows, on the way that our markets move. We haven't seen much retail money coming in. The MF, while it's picked up mutual fund inflows over the last 3-4 months, the ULIPs, all of that dried up over the last couple of years. We've been so dependent on FIIs. So what's the mood among foreign investors? How do you see them investing? I mean, there is one thought, experts say that, look, the fact that you haven't seen a big outflow shows the fact that there is a sense of faith in India still with FIIs. And the other view would be we're pretty much going to end this year perhaps, neutral in terms of FII inflows. What's the mood among foreign investors? How do you see that evolving over the next 6 months?
I think that foreign investors have been remarkably patient as far as India is concerned. I think it's a market that has been sidelined given the issues that were at the forefront in the United States as well as in Europe. So when we talk about governance issues in India and we talk about lack of policy reform, you've had much worse happening in other parts of the world, and especially in the developed markets. But still, the reason for the underperformance of India and other global emerging markets has been, in my book, inflation fighting. And I think the changeover for next year is simply going to be monetary easing in India and China. And I think this is the factor we all need to focus on. Growth will have to be addressed through monetary easing. Growth will have to be, and inflation will have to be addressed through structural factors. If you look at the case of Turkey, I mean, Turkey actually stood out a few months ago, and they started easing monetary policy to address inflation instead of, you know, hitting inflation with tightening.
Mm-hmm. Nandita, the other word, which keeps coming up on the street, especially, post this earnings as well, is this whole thing that India Inc. has shown tremendous resilience, that even in the face of all this tightening, growth slowing down, the numbers as such haven't been as terrible as people